Welcome everybody to this market update, and this time on Kleros. Welcome to Blockchain Champions. Well, Kleros, a very interesting microcap. That's why my colleagues have chosen it to make a fundamental analysis about it. Let's start by clearing the charts. It's good to always do some fundamental perspectives on each token you view it, because else you will get trapped and you will miss important information which you cannot miss. Look at the volume. It's a very low volume. It's on Bitfinex and on CoinEx, I think. The total market cap at this point is about 42 million. Trading volume today was 1 million. And you can see that there are gaps, trading gaps, because price here got updated from other price feeds and not on this exchange. Not on Bitfinex. So the chart is pretty jerky. It's all over the place. There's a scam wick from getting listed. It's over $5,000. Meanwhile, it's been trading in the pennies. Yeah, it's like a penny stock, but then a penny coin. So let's keep it short and simple. This really looks like a microcap coin. Why? Very impulsive moves up and very aggressive moves down. And here again, like this is a full push of over 350%, but it gives it all back in the same amount of time. I mean, really, this is the perfect example on why you take profits on your trades. So, let's take the volume profile, because I love the volume profile. And what this volume profile shows you is actually the feeling I already have from looking at this chart. We are totally and completely range bound. This is the value area high, the value area low, and what you can see here is that we have a lot of inefficiencies here. There's been very, very, very little volume traded at this price range. So we either have very strong buy support here, or we're going to fill up these efficiencies, one point or another. At least that's what I would expect. So if we try to draw a channel off it, and we just keep our point of control, which I've drawn. We clear up the chart a bit, and this is the channel. How I would draw it. Why? Well, we had some fake outs to the upside. We have some fake outs to the downside. The middle of the channel looks kind of respected, and we are bouncing on the low of the channel. Ready to do another fake out. Another fake out, or a drop to the last high volume high before entering this range, which is at about 3.8 cents. So what can we learn from this chart? Well, let's start with my trading plan. At this point, you'd say, well, Will, you've been telling us buy low, sell high. Aren't we low? Yes, we are low. We are currently finding support on the value area low. Yet for me, this trade is too risky. Why? We have a very, very large area of low volume below us, which if we would enter, I would suspect to fall back through all the way. Grabbing liquidities from these lows or even these lows and just wicking it all the way to 3.8 cents. We haven't seen any sign of strength at all. We've made a high, area of lower highs, area of lower highs, area of lower highs. So the trend is clearly down. Take into account that we've rejected off the point of control here twice in a row, and we're actually currently trading below the line of the value area. I'd say at this point I'm looking at lower. So for a trader's perspective, I would not take a long here. And I also would not take a short here because I'm not shorting support. So for a short, I would wait another touch of the point of control at around 10 cents. And for a long, I would wait till around 38 cents. From an investor perspective, you could say that if you're very bullish on this coin and you feel like accumulating, this is a great point to start. Put some buys in. Put some buys in all the way to the low. The lower you come, the more you buy. And then you don't care where we find support and where we change our trend, because the lower we come, the more of this token you will grab, and the bigger your portfolio will be. And that's how you build up a spot position. So what can we learn from this chart? Well, I'd say this chart is a very excellent example on why you take profits on your swing trades. So this is probably a nice harmonic. I'm not going to draw it for you. I think it's too complicated for the video of like this. But let's say we try to take a tool to figure out where price is headed. We take the Fibonacci extension because that's the only tool we have when entering uncharted terrain. So let's say we are somewhere before this move. So we're going to adjust our chart a bit. This is where we are. We have our point of control very far below us. We are trading in inefficiencies, and somehow you've managed to grab a long of this area, which is reasonable. I want to remove this to give it a better vision. So say you've grabbed along somewhere in this area, expecting a run-up for whatever reason. You never know how far we're going. That's why we look at Fibonacci extension levels. Let's say you've taken it along here. The first price target you would have is, if you've drawn this channel already back then at this wick, but let's say at the last local high or at the last all-time high. Here is the first take profit. Easy take profit. You take 10 or 20% off the table, and then you can look at Fibonacci extensions. If you are conservative, you can say, well, at the 1.1 extension, I take another 10 or 20%. At the 1.618, I take another 10 or 20%, and then suddenly we fall back down, and we fall back through the 1.618. And this is where you start thinking of, okay, what is this price action going to mean for us, and what kind of trade did I make? Am I in here for a short swing position trying to maximize this run up, or am I in this coin for the long haul and I think it's going to $10? Well, in the first case, if you're here for a swing shorter swing position, the moment you lose the 1.618 and you don't seem to even come close, I would say every major level is another take profit. So you can even say, okay, at the 1.272, I'll take like 10 or 10%. At another touch of the 1.0, I take some more, and the rest, the last 30 or 20 or 40%, what you have left, you keep it running in case we do run to $10. Unfortunately, it doesn't matter. You've put your stop loss in profit, no matter where you've taken a trade. You just put the stop loss right above it, and you would have gotten stopped out. Taken over 50% profit of your trade. Let's say you've had a pretty shitty entry at this local high, you would still have taken profits of your position at over 115%. Added in some leverage, you would easily be looking at a 3, 4, 5x of your money of this swing trade. So what can we learn from a small cap coin like this? That if you have a run up, you have to take profit. That's what traders do. We take a lot of winning trades in a row. We don't look to 100 or 1000x our money with one simple trade. No, we just try to take a few percent every day, every week, and build our position this way. So that's not how other people do it, who buy a micro cap, pour in $5,000, wait for the 1000x and become a millionaire overnight. Because that's pure luck and pure gambling. And that's what you have to remember when you feel FOMO about these stories. There are millions of people invested in millions of shitcoins who have tried, and only a few managed to succeed with this lucky gambling strategy. If you make a plan, if you trade your plan, if you take your profits and put your stop losses on safe spaces, then you are able to grab profits consistently. And that's how you trade. Good night, everybody.